All right, guys, it's now. All right, guys, it's now 7:58. In 2 more minutes, we're going to start on time. Just wait for a few more to join us. As usual, we'll be recording this session. So if you cannot join us today, if you cannot join us now, don't worry. We'll be sending that video to you by email, and also it will be posted on the website itself. But so if you have already joined us for the 1 month trial for $1, you can actually access all these videos and our past videos from the website itself. So no worries that if you cannot join us. And as long as you watch this video by tonight, 12 a.m., sorry, it'll still be relevant because this entire video is going to talk about the directional bias and how you can manage your trades from fundamental and MS market sentiment point of view for the next 5 days. And that will be my segment. And for Kayong's segment, which is talking about technical analysis, you'll be covering the charts and what the opportunity is hidden for us, again, for the next 5 days. All right, it's now 8. Let's begin. If there are gonna be any additional participants, they'll be joining us later. Shall not wait. Okay, for this week, there were some questions coming from some of our students asking us how, after I've learned the technical analysis, how do I actually apply fundamental analysis and market sentiment analysis into my trading? Okay, so I just want to cover that part and talk to you guys about how you can actually think of trading. Like how you actually thinking about, let's say if you're a kung fu fighter, a kung fu warrior, right? So you are actually a trader who wants to win, and just like this kung fu fighter, you like to win as well, right? So your job is to win fights. This is just an analogy I thought of today. Thought it would be easier for me to explain to you how does FAMS actually function within trading itself. So your job is to win fights. If you win, you profit. If you lose money, right? So every time when you get into the battlefield, when you get into fights, you are supposed to win, okay? And the job here is not just to win fights, it's also to pick a winning side. Every time you will join a fight that is already ongoing, you want to win, you want to join the side that would give you that victory, and so you can win. You can profit from the market. If you lose, you lose money. So the idea is always to pick a side, pick a side that would actually win. So what are these two sides? The two sides are always the long clan versus the short clan. So every time when you join a fight, you want to pick someone that will win, and that two clans that you can actually pick from is actually a long clan and a short clan. Every time you trade, you're also thinking whether should I short or whether should I go long. It's always the same question. Now, this is how you're actually going to go about it, right? So before you go into a trade, we actually always talk about the directional biases. Just like how you are going into this particular fight that has a long clan and a short clan, you're always thinking of which clan should I join, right? So the first thing you always have to do for fundamental analysis and market sentiment is to think about which clan is actually the strongest. You want to go with that side that could give you the higher probability of winning that fight. So in this case, you can see that the long clan here has a lot more men compared to the short clan. They are smaller in comparison. They are lesser people. There were less factors for the short clan to win, and there were obviously more factors for the long clan to win. So in this case, when you decide which clan to join, you will choose the first one, which is the long clan, and that's called directional bias. So the fundamental and market sentiment actually gives you an idea of how many factors are there within which each side that gives an idea of which particular trade, long or short, will be a better one. For example, if you've gone through the advanced technical analysis masterclass, you will know that with each trade, right, you were given an opportunity to win, right? So let's say Gartley, there's a Gartley pattern, and the Gartley pattern has almost finished its formation, and when the price has hit its DX leg, okay, when it has actually finished its formation, and you are now ready to enter the trade, you are now ready to engage the market, you must decide for yourself whether if it's a good trade to take at that point in time. Where is that directional bias pointing at that point in time? Is a long trade a good idea? If your Gartley is a long Gartley? So if it's not, you might want to stay away. Okay, what if it's a good idea then? So you will take a trade. After you have taken a trade, and now the trade is now triggered, the pending order is now in full force, and what you would like to do next is to manage your trade. So that's where the trade management comes in. So what happens is that during the trade management, your trade is already taken. Your goal is just to make sure that trade actually works well for you. And during the course of this week, you will have a lot of information fed to you to tell you whether if it's a good trade or not. And that's why we have a trade management. So let's say, back to just now's example, that you have already joined the long clan. So right now, your trade is actually longing one particular chart, right? That Gartley pattern I've just mentioned. So during this entire week, your fights between these two clans would always increase and decrease in people. So the long clan, if you have the same amount of people as just now, you are likely to win. But right now, what if the short clan says, oh, send more brothers, we have a lot more people to fight this war. There are a lot more short factors or bearish factors that's coming to join that particular fight of theirs. What's going to happen is that your trade is going to go very, very badly against you. your trade, your fund is going to go very, very badly against you. When there are more people in a short, then there's a higher chance, a higher probability that you are going to lose, and hence you're going to lose money in the market. Okay, so the idea is that over the week, if let's say the opposite happens, more people, okay, there are more people who joins in the long plan, there are more factors that will encourage that particular trade to win, then your trade would be a much better trade, let's say, compared to this one here, where the short plan has more factors to win or more people to win. And this is how you have and you always can pick the better trade to go with. So every time when you are able to trade, when you are given an opportunity to trade, and from the TA, the masterclass, from Technical Analysis Masterclass, you are always given an opportunity to trade. There are so many opportunities in the market, but which one is the best one? Okay, think about it. What is my trade? What is that particular trade? Which plan am I choosing? Am I going long or am I going short? Okay, what do I want to do when the price is near the pending order that I have input for myself? Ask yourself that first question. And number two, ask yourself, what is the current economy? Where are you right now? Which one should I choose? Should I go for a long one or should I avoid a long one? Again, ask yourself where is the current economy and ask yourself again, where is it likely to hit? And number three, with every new information fed to me over the 1 week, how does this affect the overall direction? Do I stay in or do I stay out? This is trade management. Okay, so I hope that this analogy here explains how we actually use fundamental and market sentiment in order to trade the market. Number one is always about directional bias. You always want to form the big picture first. Understand how the market is like first compared to last week. And from there, you have a good idea of how to engage the market. Okay, so without further ado, let's talk about the directional bias for this week. Okay, as usual, on Monday, we always talk about directional bias. What is the economy like last week? Okay, based on our FSI. The FSI stands for the Fundamental Strength Index. We talk about how each of these economy has performed based on its economic indicators that was given to us from Forex Street and Forex Factory. We combine them to give us an idea of how the economy has been performing over the last 1 year to 3 years time. Right, so in this case, the numbers that you see here is actually a 1 year FSI as opposed to what you see is it says 3 years, but it's actually a 1 year FSI. So we want to compare how this particular economy has done compared to say 52 weeks ago. And over this time, this 1 year period, if they have done better, it would be green. There will be an expansion. And if it's red, it will be a contraction. So let's take Aussie for example. The Aussie has actually weakened by 11.15% compared to 52 weeks ago, as opposed to its counterpart Kiwi. The New Zealand economy has actually strengthened by almost 20% in this 52 weeks time. So this is last week's data, last week's economic indicators compiled, aggregated. How about this week? This week we can actually see that the Australian has actually weakened by another 10%. The Kiwi strengthened by the 2%. The Canadian actually strengthened by quite a significant one from its negative 4%. Now it's up 7 to about 3.61% strong. Chinese has gone down slightly. I think we all know that it was reported widely that the data were not good. Japan hovered around the negative 5% level. US dollar also the same thing, hovered around the 22% level for quite some time now. And we see the euro coming down a little bit, but still maintaining its high of expansion. The pound hovering around the 4% to 5% mark. So all this gives an idea of how these economies are doing already. The very simple job for us now is to pick the best, or rather the strongest currency versus the weaker currency, so that we have an idea of how to trade the week starting from today on Monday. Okay, but this economic indicators is just one factor. We can actually combine this entire analysis with, let's say, the COT, the Commonwealth of Traders report, to find alignment between the fundamental as well as the sentiment, the market sentiment. Okay, so if you have gone to the Forex Fundamental Analysis and Market Sentiment Masterclass, we always use these two things, the fundamental analysis and the market sentiment, to find alignment. If we have an alignment, we give a clear-cut bullish call. If there is no alignment, very little alignment, we give maybe a slightly bullish or a slightly bearish call, or sometimes even a neutral call, which means we have no idea how it's going to go. But based on these other factors, it might likely go one direction, for example. So in today's session, the webinar, we always talk about how we have alignment in a particular in this week's market as opposed to last week. Okay, so this is the FSI. As we can see, it looks like this right now. We have two red ones, which is the Aussie and the yen, and this is the COT. I'll just quickly get your attention to, let's say, the Aussie Australian dollar there. The Australian dollar has actually registered an increase in net long position, which means overall there are a lot of big money who is betting that Aussie is going to be stronger and stronger. And therefore, there are a lot more long contracts than short contracts in the futures market. As opposed to what is written here in FSI, Australian economy actually weakened over the last 1 week. So in that sense, there is very little alignment between what's telling me within the futures contract versus the actual economic data, the actual economic figures. So that's one way that we can tell that the alignment there is not actually very strong. And such alignment is rare. It's not occurring on a weekly basis. And we always want to make use of those, right? So if there are clear ones, we will just call a clear-cut bullish or bearish. And if they are not so clear, maybe slightly, maybe just a little bit bearish or a little bit bullish. Okay, so let's see what the market is in store for us this week. Starting from the euro, we see that there is a high increase in net short positions from its already quite weak level. It is now actually larger. The net short has surpassed its counterpart, the pound. You can see actually the pound has actually decreased a little bit. So the long contracts has actually won over the short ones for this 1 week, okay, from last week. The SHARE has also decreased. Yen has also decreased. Overall, still a net long position, but the net long position has lost its steam compared to a few weeks ago. The Aussie, I mentioned just now, has increased compared to last week. Look at Kiwi. Kiwi right now, you might think that there's a typo there or there's a mistake there, but that actually isn't the case. The Kiwi here is actually coming from a net short position going to an almost zero position, which means almost all of its short contracts in the market was gone over last week. And Canadian dollar, we see that it is now lesser, which means there's overall net short position, more short contracts are added into the market. And it was actually played out last week. Right, so a few notes to remember about COT. Number one, it's lagging. It actually tells you what's happening last week, from the previous week's Wednesday to last week's Tuesday. So it's lagging, but it is able to help you confirm the momentum that's currently playing out in the market. So it does not give us a signal, but it confirms certain things that we are trying to look out for. So it is not the most accurate, but it does confirm a current trend that's currently going on. Okay, so there are a few ways we can actually use this COT. I'll just be going through all of these currencies, all of them, and you will see how they can actually sometimes confirm our trend. Very useful. Okay, so let's start with these three ones first. The directional bias for these three single currencies are as follows. The euro is slightly bearish to neutral. The pound is slightly bearish. The yen is slightly bearish to neutral. Okay, so bearish for all these three. US dollar is bullish. The Aussie is neutral to slightly bullish, and the Kiwi is bullish. I did not lump all the bullish and the bearish all together. It is just by coincidence that this one page here is bearish and this one page here is bullish. And finally, we have Canadian, which is slightly bearish. Okay, so these are the 7 currencies I'll be talking about today. Let's begin with the first one, which is the euro. So I'll be talking about why we think that euro is slightly bearish and to neutral, and we'll be discussing how to actually trade this particular currency given its directional bias. Okay, so for the euro, we have slightly bearish to neutral. The slightly bearish to neutral directional bias is coming from FA and MS, the Fundamental Analysis and Market Sentiment. Let's talk about the FSI first. The FSI calculates all the economic indicators for euro for the last 1 week, and it shows you how it actually plays out for the last 5 days. The FSI shows that there's expansion within the economy itself, and it is increasing at a very high rate. Right? The MONPOL, which stands for monetary policy, is picking up the growth. But as what Mario Draghi says, it is not self-sustaining, which means at any point of time, if they remove if they taper off the QE, this growth is not going to be sustainable. This growth is not going to be sustainable if Mario Draghi tapers off the the QE. Okay, I hear that there is a lot of echo sound. Right? So I hope this is better. Just arranging so the speakers will be muted. Okay, let me know if it's better. Okay, I'll just continue now. So, as I said, the Mont Call is picking up the growth, but it's not self-sustaining. Let's see what the COT tells us. As I mentioned just now, it is highly, highly negative. COT added a huge number of short contracts, also a large number of longs as well. And this gives us a very negative net short. But why do I know that this is not actually telling us a lot? Let's take a look at the COT index right here at the, top, the bottom right corner. The COT index actually shows us all the net long and net short position that this Euro futures contract had over the last 3 years. So if it's around the zero level, we will know that this bearishness is the one of the most bearish over the last 3 years, which means the bearish momentum coming up from that particular net short position is one of its lowest. As of now, this particular negative short, although the highest within the 7 currencies, has not been the highest for this particular currency, the Euro futures. As opposed to, let's say, pound, as I will show you later, its lowest futures short contract net short position is actually one of its lowest. So how do I interpret this? The idea is that, yes, Euro is now very, very bearish in momentum, but it can be bearish, more bearish. The momentum of the bearishness can be more if, let's say, it had added more short contracts within this 1 week. Okay, so yes, it is bad. It has a bearish momentum, but not the most bearish it has seen. And the conclusion that we have had here is there is actually no alignment between the fundamental analysis and the market sentiment. So what is the verdict of that? Let's say we had no alignment. Our conclusion is that there is very little alignment and it is now neutral or slightly bearish. So how do you actually trade it? Right? So how do you trade EUR? EU is going to release a lot of PMI data this week, and we can all see what's happening right now. If I just go into Forex Factory, and I'll just show you what actually had happened over the last few hours before this, before our session today. You can see that there are a lot of good, very green data here. The euro is actually expanding as we are talking, right? So all this data shows you that they are not only beating previous data, they are also beating the forecast, which means this expansion that we are talking about in the euro continent is actually expanding really, really quickly. And at the same time, and yet the COT is still registering a short contract, which means the market is unsure of what is it they are going to do. They are not sure whether they should strengthen or they should weaken. Definitely, since last week, it has gone down. The bearish momentum might stay. And because of that reason, technical analysis for this week will have more say, right? The technical analysis will be the most important factor for you to trade this particular currency. Given that this week there is only PMI data which has just gone to pass, and there's no other important news release that's coming up after today. Draghi is going to speak this week, and his speech is going to talk about stability, equity, and monetary policy at German Institute for Economic Research in Berlin. If he's not likely to talk about relevant things, or he's not going to answer the question properly on his news conference, he is unlikely to talk about anything that would move the market at this particular day. But let's see. We do not know what can happen. Draghi's speech remains one of the biggest risk factor when you trade the euro itself. Okay, let's continue on how to trade the particular currency. Remember that there is now a bearish momentum. It is likely to carry forward for this week. Look out for two things. Number one, trend continuation. Number two, trend reversal. So if you have if you have studied under the technical analysis masterclass, you will know that there are two kinds of technical analysis that you can look out for. Number one is a trend continuation, 1, 2, 3, 4. The other one is trend reversal, which means you're looking for RSI divergence. Look for these two clues in order to help you trade that market. Overall, we are still short. We are still bearish on euro, slightly bearish. If you are going to trade a short on this particular currency, make sure that you have these few factors in mind. Number one, the Draghi's speech might include the horizon, or when is he going to taper off QE? The big question here, the million-dollar question here. Any rumors with regards to that particular topic, which is tapering of QE, is going to send euro upwards if he does give you a proper answer. Which, of course, in my central bank analysis, he will not mention any of such things until December itself. So you might not have to worry. The thing is, if it does happen, you have to be very, very vigilant about it. If you have a trader, if you are trading a euro. Another thing that you might want to look forward, you want to look for when you trade a short of euro is that it is on a technical analysis side, it is technically oversold. If it's technically oversold, which means you are not getting in at a better position, unless of course you are doing a 1, 2, 3, 4 going by the 61.8, then you perhaps would get a very good short position. Okay, so these are two risks that you might want to take note of when you short the euro. Otherwise, you might want to stay away from this particular currency because we have very little directional bias here. Okay, so that's for euro. Let's go to pound. I can move slightly faster if you have understood what I've just mentioned. If you do not understand what we have just mentioned, feel free to ask Gavin myself. He will explain after the video. Okay, for pound, let's go slightly faster. It's now green. It's now increased from its previous low and is now expanding. To be bullish, you need to see a decisive growth trajectory, which means right now I'm not seeing a lot of decisiveness here. It is still hovering around the 5% level as mentioned just now. From sentiment point of view, it is maintaining its bearishness. We all know that Brexit is ruling and Brexit means fear, right? So the COT low index, the low COT index is not surprising here. But take a look at this. I mentioned just now the COT index that there might be a clue that there is a trend reversal. How do I say that? When it is zero, as what you see this year, if it's zero, it means that it is the bearish, it is the most bearish net short position in 3 years period. Which means you might want to, you definitely do not want to long this particular pair as of this time. But if it improves from 0 to let's say 1.37, then we might potentially see a trend reversal here as more long contracts are added into the market or less short contracts are added into the market. So that's how it goes. Let's say if the COT index goes up to 100 points means that it is the highest net long position in 3 years' time. And that has actually happened to the yen a few weeks back. We will cover yen shortly after. Okay, so bottom line, alignment between the FA and MS is weak. Yes, there's improvement in COT index, but still overall it is a highly negative sentiment. Limited upside on long trade unless there is a catalyst, and the catalyst must come from Brexit now. Okay, moving on. How to trade the pound? There is GDP data, and Carney will talk about Brexit this coming week, and it is going to be on the same day as Draghi. Euro pound is going to be a very roller coaster ride, right? So Carney is going to talk about the economic consequences of Brexit vote before the House of Lords Economic Affairs Committee in London, and I wonder how that's going to affect the market. But we are all going to find out this week, aren't we? Right? So take into account that when you are trading the pound. Now, for the pound, always take note of the Brexit news that is going to come out. Okay, that kind of news, especially when it is unanticipated, always send the market into the haywire, like what we seen before from 1.28, which crashed to about 1.18 at its lowest. Right? If there's no such news that's going to come out, it is likely going to range, which means you can actually just play the ranging game, short from the resistance and go long at its hold on, let me just bring out the chart and go along its support. Okay, so let me just bring out the chart for you guys. I'm talking about pound US dollar. Slow. Okay, I'm talking about pound US dollar. So you can see that it's currently ranging right now along this level, which is 1.233 and 1.21. So within these two levels, you can actually short on the resistance and buy a support. It's a very simple support and resistance play, but be sure that you're getting it at the right price, right? So the risk to a pound short trade, because we are slightly bearish on this particular pair, is that Carney mentioned about Brexit's impact on UK and the economic overreaction that comes with it. And if he says that the pound is actually undervalued, or that the UK would not actually have such a bad impact, whether soft or hard, then we will see how the pound reacts to it. If it breaches the resistance level of 1.233, for example, it might send this particular currency above up again, because, well, Kanye said that we are all overreacting. Fear has gotten the better of us. Okay, another risk is that there are no real moves here. There's just about 150 pips of the channel that I just mentioned for you. And if it's just 150 pips, it may not be the best for swing trading. The risk reward might be limited, but you do see a very predictable move here. It goes down to 1.212 as you can see from the chart here, and you can take a very comfortable shot. A long here at 1.212, because this is by far the lowest it has gone and has not managed to breach this particular level. Let's just remove that. Right, for now, 1.212 right here, right? And if let's say it has gone above 1.23, which it tried to test a few days back, and it failed to breach that, 1.233 will be a good place for you to short. So right now it's around 1.224. You might want to get in with a short, but on a smaller risk, since that there is so much there's so much risk, so much space that it could potentially go up. Since, okay, there's a risk there. For pound, that's it. Let's move on to yen. Again, I'm going to go faster. Yen is still red. It is slowing. The expansion is going up, definitely. The trajectory is going up, but it's slow in its expansion. Very little change from the previous. There are more data to be released this week, and they are not important data, which means they are not catalysts. FSI might be green by the end of the year. So even though it's zero, but it is still actually improving. We will see less longs and more shorts in the market, which means now they are actually slightly bearish on that particular pair already. As you can see here, less longs, they're closing up long positions and they're adding more shorts into the yen. Your net long yen position is now decreased from 45,000 to about just 36,000 overall net positive. So do we see the end of the yen strength? It might just be. As mentioned just now, yen was actually at its 100th level, which means your COT index is telling me that on the 3 years level, your net long position is actually the highest, and now it is at 84 level. I might actually be seeing a reversal here from COT's point of view. Okay, the bullish momentum is now weaker. I think we all know that now yen is actually hovering on a 104 level, testing its high 104.2 or 0.3, and if it breaches, there's more upside. US is strengthening, yen is weakening now. What do I talk about US? Let's talk about this very quickly. How to trade the yen? Number one, we must know that the catalyst for yen is very unpredictable. You do not know when Kuroda is going to come out and talk about something. You do not know what kind of topic he's going to talk about. Maybe he's going to talk about tapering of QE. Maybe he's going to talk about more QE. We don't know. So Japan is a very unpredictable catalyst, especially when it's also a risk currency, or rather a safe haven currency. If something happens in the market, it might just send the yen, or something bad happens to the market, it might just strengthen the yen because it is a safe haven currency. So how do you trade this particular yen for this week? For yen, we believe that it's going to take the back seat again, just like last week, but it is now leaning bearish momentum as opposed to last week when it is leaning the bullish momentum. Now, with a bearish momentum, you might want to just pair it with a strong bull, or you might also want to pair it with a strong bear. Bottom line, it must be a strong bull or bear in order to trade the yen. Okay, so for yen, it's going to take the back seat. It's not going to dictate market movements. It's likely going to be a secondary currency for this week. The risk to a yen short trade is that there will be a risk of sentiment. When there's a risk of sentiment, let's say the market equity crashes, this will strengthen the yen by a lot in a very, very fast reactionary trade. Most people will just go into yen without questioning when something as big as market crashing happens in US or any equities market in the world. So beware of that. Always have a risk management in place. Another point that you must take note of, as mentioned just now, is the US dollar. Why do I say that US dollar will actually affect the yen? The reason is because US yen is one of the most traded currency pair in the world. And when US dollar is stronger, it actually moves the US yen upwards, which means it is bullish. When that happens, when the US dollar yen is bullish, it will also weaken yen across the board. you will see all the other yen pairs, euro yen, pound yen, kiwi yen, Aussie yen, also being bullish just because US dollar is now stronger. Now, the opposite is true. If there's a weaker US dollar, it would actually cap US yen's upside. And because of that reason, yen might also strengthen across board if it actually falls down to its previous support of 103.4. Okay, just take it to the chart. Very quickly, just take a look at the US yen. If let's say the euro yen weakens over the next few days, right now it's trading around 104, and I mentioned that there is a support here at 103.6, not 0.4. If it falls back here, you will see that there is a yen strengthen across the board as well. When that happens, as I mentioned, the yen would also strengthen across the board. Okay. For US dollar, it is also the same thing as a few weeks ago. It is still expanding. It's still around the 23% level. It's holding on to its precious solid FSI figure. Nothing can move it. Nothing cannot handle right now. Rate hike case still on the table. Bottom line is that. So FSI is telling us that yes, good news. Whether it's a small negative data that comes out, it doesn't really affect what the US dollar is actually doing right now, because it is pretty green still. A small bad data is not exactly going to affect that. So when I talk about US dollar sentiment, I don't exactly talk about COT, because the COT is a different way to calculate for the US dollar. We actually look at the DXY, which is the dollar index. So a few points before we look at the chart. DXY is en route to $100, expecting to test that mark. But right now, we are actually looking for signs of reversal. Signs of reversal meaning to say that before it reaches the $100 mark, it might just come back down from the current $98. As we are preparing for the webinar just now, a few hours back, there's actually a RSI divergence here. That is a sign of weakness. But the uptrend is still holding on nicely. Let's say if the DXY guns for $100, there's still going to be space to ride, and we will see that currency riding even higher. US dollar going up, US yen going up, pound US dollar going down, etc. and etc. And we all know that Euro USD was the strongest Euro US dollar pair last week. Let's take a look at the DXY, which is the dollar index, and we see that right now it's around 98.57. And what I also see is that there is a divergence here. Right, so there is a divergence up here, a double top, and there is a divergence here. And given that there is a divergence here, I might be worried that this particular trend is now not sustainable and it's going to come down. And when it's going to come down, this will definitely send the US dollar across all currency pairs weaker. And my bullish call would be in jeopardy. As I mentioned, US dollar is bullish right now because there is sentiment alignment with the fundamentals. But right now, we are seeing that DXY might weaken. Although it is still in an uptrend, it might weaken. That is the point. So I want you guys to all be very vigilant of such a connection between the DXY and all the US dollar. So that definitely becomes one of the key risks for this bullish dollar trade. How to trade the US dollar? Not much data released this week. Key focus is actually on the DXY, as I mentioned just now, and the TA, which is a technical analysis for all your US dollar pairs. Another focus is the Euro USD. Okay. As I mentioned just now, US dollar strength will affect the yen, right? So in this case, the Euro USD, which also covers the euro, would also affect the US dollar. As I mentioned last week to one of our students, that US dollar may have very little steam to run because there's very little data to support a huge move, but it did happen. I was wrong. Why? The US dollar actually moved stronger because the Euro USD was very, very weak, fueled by Draghi's speech. The Euro news actually is a key driver to US dollar being strengthened or being weaker. So when Euro was sent to be at its weakest, which is around 109 to 108 level, the US dollar strengthened together with it. So Euro USD weakening, which means on a bearish move, would also likely to strengthen US dollar. The opposite is true. If the Euro becomes stronger over the next few days, the US dollar would also be affected. Just be aware of that. Okay? Next thing is, if you want to long this particular currency, must be aware that bad data is always going to affect a currency like US dollar in the backdrop that the rate hike has originally hyped up. is already hyped up to the extent that any bad data would send a lot of US dollar longs and US dollar bulls to retreat from the trade itself, pushing, as right now the US dollar is overvalued because of all the hype for rate hike. There might be a chance where a bad data will just send it back to a technical retracement. So beware of that. Go in when the price is good. A 1, 2, 3, 4 structure trade here would be a good choice. Okay, moving on. Let's talk about the Aussie. Aussie still in the red, but expanding. Not enough though, because Aussie's weakened last week ever since the employment data came out. In this particular currency, when we say that we are neutral to slightly bullish, we are actually talking about how we are more neutral than bullish itself. But why are we actually bullish? The reason is because RBA. If you actually read my analysis on the Reserve Bank of Australia, we actually mentioned that the RBA is very bullish on what the economy how the economy has been performing so far. But nonetheless, we feel that there's more neutrality in it because there is no alignment between FA and MS. Let me explain. Net long position widened a lot with more long contracts added to the short contracts, but at the same time, the fundamental shows us that it's actually weaker. The only reason why we are just slightly bullish on this is because RBA, the Reserve Bank, is actually very bullish on its outlook. Right? So how to trade this Aussie? With only CPI to change the trend for this week, which means it's only one news that can be a catalyst, we will see the Aussie taking the back seat, or it will just continue its trend from last week. And what was the trend from last week? After a rally, it stopped short at its resistance level at the 0.77 mark. And that 0.77 mark has been a level that was held very, very much so over the last few weeks to few months. Take a look at that. So there's a very strong resistance level here that was tested 1 time, 2 times, 3 times, and 4 times. The 0.77 mark is a very significant one. So last week when it went up and stayed there for almost 1 day, a lot of people were wondering, is now the time for the Aussie to rise up even further and breach the another level of 0.775. Unfortunately, employment data came out, and right now we are seeing how it actually weakened. So last week's trend was uptrend. And when it hits the major resistance at 0.77, it now comes back down to a downtrend. When I say that this particular currency pair takes a back seat, it might just let TA, technical analysis, call the shots. Right, so we will still want to talk about how we feel that there's a slightly bearish or bullish move there. So we talk about what is the risk to go odd long trade. But of course, if you are shorting Aussie, these 2 points here are interchangeable. It's vice versa, right? So let's talk about Aussie long trade. What's the risk there? Currently, Aussie USA is trading near the 0.77 level, which is key resistance area. Even if you are trading along here, you might see that there's not enough space for you to go up further. You're actually looking at just how many pips right here? About 764 now. 763. Sorry, 763. You actually have just about 70 pips for you to play around with. This may not be the best trade ever for Aussie USD. All right, and it goes the same for all your Aussie trade. If let's say your Aussie trade wants to go up, you will also be looking at Aussie USD whether it's going up. That drive in US Aussie dollar, Aussie USD currency pair actually moves the rest of the other Aussie currency pairs as well. Okay, so again, what happens last week is that there was bad news to bring down the Aussie. The same thing can happen if you're making a long Aussie trade. If you're waiting for a long Aussie trade, you also need a lot more good news in order to break that 0.77 level in order for you to get a really good high running trade. If there's no good news, there's no rally. Simple as that. And for good news, watch Aussie and Chinese economy. So that's for your Aussie. Second last, which is the Kiwi. Kiwi's data has been positive, but ever since August, we're actually looking at a minor downturn. It's the same thing we have mentioned last week. But overall, it's still green. Compared to 52 weeks ago, this economy has been performing rather well. If you look at the COD, there is actually alignment here, right? Closing of all the shorts in the market, leading to just a negative of 153 contracts in the market is actually a very bullish sign for us. Why? Nobody is interested to short this market anymore. Maybe there's also no interest to trade this particular currency in the first place. What it tells us is that there is actually an alignment between fundamental analysis and market sentiment. So given that, how do we trade this? Bear in mind that Kiwi USD is now on a bearish momentum, tracking the Aussie USD as well as there is a strong US dollar. It should fare better if you pair it with another weaker currency, which means something like Euro Kiwi. The SPX is currently supported at 2120 and is still a risk-on mode. Your bullish trade would be of a limited downside, but there is a lot of upside to it. Let me just point you towards Kiwi USD first to bring out a few points I've just mentioned. Number one, it went up and came back down here. We can see that there is actually very limited upside to Kiwi USD, which means if you are trading a bullish Kiwi, you may not want to take the Kiwi USD trade. There's limited upside as mentioned. Again, it was tracking the Aussie dollar. It went up, it came back down. It was exactly the same as its predecessor, its big brother, the Aussie USD. Just like this, right? So you might want to stay away from this particular pair and go instead with another pair, let's say like the Euro Kiwi, since Euro is now on a slightly bearish momentum. And we see that this particular momentum right here is very, very bearish. You might want to take a 1, 2, 3, 4 or just a short trade from this particular pair as it goes back and retraces up. Okay, so this is for Kiwi. What I mentioned about SPX, what I mean is that the SPX is an equity market. The equity market is always a good way for us to tell whether it is a risk on or risk off mode. And right now, there is a very much risk on mode in the market. If I just bring your attention to the entire market, if I go to the day chart here, you will see that it is now still at almost all-time high. And when that happens, there is a risk on mode. Your Kiwi and your Aussie is expected to strengthen. And how does this go against you? Let's say if it goes down to 2120 level, which is around this level, and it breaches the level, right? So if it breaches this level at 2120, what's going to happen is that there is going to be a risk off mode. And when that happens, your Kiwi and Aussie is going to weaken by a lot because they are risk currencies. When there is a risk off mode, Kiwi and Aussie will weaken. So that forms your risk to a Kiwi long trade. Risk off sentiment will weaken if risk currencies weaken risk currencies like Kiwi and Aussie. Beware of that. Watch the SPX or the S&P 500 when you are trading this particular currency. And Kiwi USD movements will also affect the Kiwi pair. As I mentioned, a similar theme for the last few currency pairs like the Aussie USD and the USD Yen. Be mindful of the US data as well, because this would also affect your Kiwi trade. Okay, bottom line, for Kiwi, we have a bullish call because there's a fundamental and market sentiment alignment. Last currency here, which is the Canadian, there was a reef surface. It went all the way up back in the July and August period. It went all the way down back in the September and August, October period. And now it popped up a little. So you can see this tiny green bump here. The Canadian data has improved, but it fell short of expectation. And this is coming from the Bank of Canada. Right, sorry about that. It came from a Bank of Canada. And because of that, what do we actually say about this particular currency? We say that it's slightly bearish. Why? Both positions have lesser contracts, but it is still showing a further net short. Number one. Number two, the OIs are decreasing, which means your open interest, it shows that there are a lot lesser interest in trading this particular currency. So there is no clear alignment between FA and MS, but it tells me a few things. Number one, the fundamental strength index does not support a super bullish view. Number two, the COT, which is the Community of Traders, shows me that there is overall net short expectation, or rather an overall net short position for this particular currency. And at the same time, the BOC is feeling pretty bearish about its own economy, which means they are not actually seeing how Canada can improve significantly over the next few months. Combining all this, we call it a slight bearishness. But let's take a look what kind of risk you're actually expecting for US Canadian. Right, how do you trade the Canadian? Number one, avoid Paulus for the time being, because the things that he says actually led to a roller coaster ride for the US Canadian last week. If I will just bring you to that chart and you will see what I know, what I meant. At first, it went down because of strong oil prices like such. Went down all the way from here to here, and you can see that there's a very strong Canadian strength here. But when the BOC governor, Paulus, comes out and talk about how the economy is not doing well, especially exports, and they're actually actively discussing more stimulus, you can see how that particular currency just went back up again. All right, so that's how volatile it is when Paulus comes out and talk, right? So this is one thing. You might not want to trade that particular currency before he talks, which is tonight at 3 a.m. Wait until tomorrow morning for more clues. Number two, watch for oil prices. If it goes up beyond the 52 level, which is now its major resistance area, you may see a very strong Canadian over the next few days. Okay, so this is right now the major resistance around 52 level, and it's actually trading at the channel, which is between 52 and 50. So if it stays within the channel, you are all set to trade this Canadian. But if it's not, if it goes down or it goes up and breaches the major support and resistance area, then you will see very significant change within the Canadian dollar as well. Okay, so the TA side is also a very interesting one. The USD Canadian dollar has now breached the 1.33 level, as I'm shown just now. The USD Canadian dollar has actually gone up and has actually stayed above this key major resistance at 1.33 level, which is this one. And right now it is tested. We want to know if this level can break again. So what we do is that we wait for the price to come back to 1.33. If you are aggressive, you can go in straight and long this particular currency. Since we are calling a slight bearish on this particular pair and US dollar is bullish, it would give you a pretty good long on this particular pair. But beware, if this price comes back down and it fails that test, what we see is that that price comes back down, tests this level of 1.33, and it fails for whatever reason. It might send another wave all the way back down to its previous trending level. As you can see, it has been trending a while at this the channel between 1.3 and 1.33. What if it goes up? What if USD Canadian breach 133 and stay up there? You will see potentially a lot of upside. So much space for it to run, right? So it all falls down to this level of 1.33, whether it can hold or not. Okay, so that's for Canadian. Risk to a Canadian short trade, which means longing the USD Canadian, is number one, it's very touchy to sentiments, especially on oil and PLOS, which is the governor or BOC. Make sure that you are on site on these two things before you trade the Canadian dollar, especially the oil, since anything can happen. Anything can be said by OPEC, by Putin, by Russia counterparts, and it will just send oil up or down. So beware of that. Another risk to the Canadian short trade is that the Canadian will strength. And if the oil breaches and stay above the 52 levels, if you're shorting Canadian, you might see the USD Canadian come back down again. And we are not going to be surprised if the oil stays above $50 and go even higher to test the 55 level. Why? Because there's talk of World War III apparently. If you just type into the Google and just say World War III, and you will see that there is Putin talking about how Hillary, if she wins, is going to be a war. World War III update. There's even an update for that now. Russia to attack US in 15 days? We don't know that. It's all speculation. But even a speculation can send oil prices upwards. When there's talk of war, oil strengthens. And when oil strengthens, of course, we all have to be scared. But first and foremost, your Canadian will definitely strengthen first. Okay, so that's all for my directional bias and trade management talk. It's on fundamental analysis and market sentiment. We will take a short break for 10 minutes first before we come back with the TA segment. Kayong will be covering the setups for this week. This week will also be the last week where I will talk about all 7 currencies. Usually I will just talk about 3. And for illustration purpose, we will also be talking for this time round, I actually talk about 7 currencies, but from next week onwards, it will be an interactive session where I will only be covering 3 important currencies where I find alignment, and the rest of the currencies, if you guys are interested, just let me know and we'll talk about it. Okay, and I'll go through the fundamental analysis and market sentiment analysis. Right, so I hope you guys have enjoyed and benefited from this session, from this part of where there's FA and MS. We'll take a 10 minutes break. We'll be back at 9 p.m. and by the time Kayong will be taking over to talk about technical analysis. If you are already watching this video, stand by with your charts and you will learn much better and much faster when the TA guru is here to guide you.
Okay, that's all from me. My name is JT. I hope to see you guys in our master classes. One more thing. On the 29th of October, which is this Saturday, we have another round of the Forex fundamental analysis and market sentiment. We will teach you how to read these economic indicators, help you understand what is the fundamental forces at play, and help you understand what are the things or factors that will move the currency market. If you have any friends who are interested to join us in this particular session, let us know. It's the last session where we are going to charge at $197, and we're also giving out away $50 referral for. If your friends are interested in joining us, you will also be getting a $50 referral from us. I hope to see you guys there, and I'm sure that this session is going to help you guys to understand the forex better and also to trade more profitably. Thank you.
With your name on it, above the clouds in the atmosphere. Just say the words and we out of here, out of here. Hold my hand if you feel scared. We fly up, out of here. We can stay fly like a G6. Chop the streets of Tokyo, get you fly kick. Girl, you always on my mind. Got my head up in the sky, and I'm never looking down, feeling priceless. Yeah, where we at on this view of mine. Rhymes next level, Super Mario. I hope this works out. Cardio, till then, let's fly. Geronimo. There's a world out there we should see. an exit in this world of fear. I can see the path that leads away. Mom never left and daddy needs me here. I wish the wind would carry its shade. Looking through the window to a world of dreams. I can see my future slip away. Honey, you won't get there if you don't believe. I wish the wind would carry a change. I'm standing up, standing up. I need a change. I'm standing up, I'm chasing up. I need a change. I'm setting fire to the light that I know. Let's start a fire everywhere that we go. We're starting fires till the lights are burning gold. Till the lights are burning gold. Looking for my ticket to a higher place. I can see my chance begin to fade. One step forward and two back again. I wish the wind would carry a change. I'm standing up, I'm standing up. I need a change. I'm standing up, I'm chasing up. I need a change. I'm setting fire to the light that I know. Let's start a fire everywhere that we go. Let's start a fire till the lights are burning.
All right, okay. We'll continue from here. All right, so just a quick one. All right, basically we got two requests already. One is to actually look at dollar CAD. Another one I'd like to just share with you is let's jump to gold first, all right, before we go over to this week analysis. Simply because we had a trade call, as in we had the call alert. All right, basically every day what I do during the Asian session is I look into the market, all right, based on technical analysis under our portfolio to look out for key levels that we are interested to take a trade. All right, so right now gold has entered into the key level. All right, so since we are in this, all right, and it's happening right now, I'll just use this opportunity to share with you guys how we actually do it and why we actually identified those levels. Okay, so before we go into what is the specific key level, I'll just walk you through on a higher time frame. All right, what is happening in the gold market. Right, so from this chart, you can clearly see that on the H4 time frame, all right, there was a huge drop, and then right now, what's happening in the gold market is basically in the consolidation phase. All right, so with that, in terms of consolidating, we do have a specific strategy to tackle that kind of environment. And if we drop into the 1 hour time frame, all right, what we see is that it's in the consolidation phase, all right, but recently on the H1 time frame, we can see price are moving higher, all right, until it forms this triple top. All right, let me just draw in to show you where this triple top is. 1, 2, 3. All right, and if you look into the RSI indicator, you can see a very clear divergence over here as well. So as price prints a new high every time, all right, it tests higher highs, your RSI is actually printing lower high. Right, so this is a very clear divergence, and we can see that recent price movement has breached the neckline of this triple top. Okay, and that's a signal and indication for us to actually start looking out for a potential counter trend, because in the past on the H1 time frame over here is an uptrend. Right, so once price broke that neckline, we'll be looking out for a potential counter trend. Right, it seems like it's a change of trend. Right, so what we do is we just pull in our Fibonacci tool. Right, from the most recent swing high to the swing low over here, we usually for this kind of counter trend, we'll be looking out for the 61.8 Fibonacci. Right, so it's at this level. Right, but you can see we don't put a pending order because when we are doing intraday, we would like to always wait for confirmation when price enter that zone. And you can see right now is price has breached the entire level, all right, pretty strong in the bullish momentum. So we will not take that trade, all right. But in today's video, if you watch our intraday video, right, you will understand that we do have another key level up here, right, and that is actually a potential advanced pattern forming at higher, right? Other than your 61.8, we have another level that we're looking out for, which is your 88.6 Fibonacci retracement. All right. In terms of price level, we are looking at 1273. All right, so our price is still moving higher. So when price enter this area, all right, it'll be interesting to see how it react. All right, so I'll put this analysis as of now over here, right? And before we end off today's sharing webinar, we'll come back to this and see if price actually move higher and enter into the zone that we might potentially take a trade from this. Okay, so again, for those who are watching on the webinar itself, if you have any questions, all right, always feel free to drop them in the chat box, all right, or if not, all right, you are in our WhatsApp broadcast list as well. Simply type your question there, all right, then we'll actually answer them as we go along. Right, we do have one of a request to actually analyze into dollar Canadian. All right, so I'll go over to that and look at dollar Canadian to share with you, what is the process that we adopt when we look into technical analysis very quickly. All right, so usually what we do is what I do is I quickly scan on the daily to understand what is happening on the daily time frame. Right, so right now you can see that on daily time frame, this is what's happening. Okay, so price is moving higher, but it's very slow. It's basically inching up and up bit by bit. All right, and if you look into the fundamental for dollar Canadian, it's a clear divergence. Basically, US the Fed itself is the only central bank that's talking about potential interest rate hike. And if you read into last week Canadian BOC itself, the tone itself is dovish. All right, so you can look at dollar CAD is one of the more as in terms of dollar CAD is one of the clearer one. You can see that it's this 2 days. All right, you can see it's a huge bullish momentum. All right, but we don't trade off the daily time frame, so we drop into a 4 hour to look at what's happening. All right, so over here you can also see that price is actually breaking new high. All right, which was formed over here. Okay, price is a very strong momentum and is breaking new high. And what we see over here is this bottom and this bottom. All right, basically these two bottom. If I draw in a line, you can see that there's also a divergence happening with your RSI indicator. Okay, and this double bottom, all right, very obvious price has breached this neckline. Okay, so when price breach that neckline, what we do is we just pull Fibonacci from the recent swing low to the recent swing high. All right, and the key area that we'll be interested to look out for a trade will be at the 61.8 Fibonacci level right over here. Okay, but of course, if you look at current price, is at about 1.3340 around the area, and the area that we're looking out for is 1.3140. Right, that's about 200 pips. All right, so highly unlikely this is gonna happen, very soon. Okay, but it is a technically a valid trade should price really retrace all the way back here, right? But this is because of H4, right? It's more of a swing trading time frame. If you're looking into daily time frame, intraday trade ideas on the daily perspective, right? So I'll just clear all my charts and I'll just show you what are some of the potential that we have over here. Right, over here you can see price is moving higher bit by bit, but RSI is showing that it's losing steam. Right, so this is where we can start to eyeball this. All right, and potentially we might have a counter trend set up. Okay, for us, we don't take a very aggressive short just because there's a divergence, because price can easily continue move higher, and we wouldn't want to get squeezed all the way. As price move higher, we keep shorting and then you keep losing a lot of money. All right, so what we want to do is wait for some form of confirmation, meaning price has to show that yes, it's turning. All right, and how does that happen is that we have this neckline over here, this area. Price needs to break and close below this area before we decide to take a potential short for a counter trend. Okay, so that's basically one potential idea on the H1 time frame, which could happen soon, earlier than the H4 that I shared with you just now. All right, so other than that, there's not much potential for dollar CAD other than this H1, which is highly it could happen on a shorter period of time compared to the H4 that I shared with you just now, which is about 200 pips away. Right, so that's to quickly share with you how we analyze certain chart and what is the thought process that's put in place. Right, so I'll go over to some of the signals that we identified for this particular trading week, right? And I'll share with you the thought process and the analysis process that we put in place to actually identify all this setup. All right, so the first one I want to talk about is euro dollar actually, because that's one of the more common pairs, right? So let's go over to euro dollar on the H4 time frame. Let me just clear this analysis that we did last week itself. So you can see that on the H4 time frame, right? So before that, we just go over to daily to have a very quick view. Okay, you can see that for the past weeks, all right, the momentum towards the downside is very clear and very strong, right? It has even breached this previous support level that is tested 2 times, and price is currently trading below it. So on daily, all right, it's pretty clear that the momentum is towards the downside. So if you go to H4, you can even start to identify potential setups already. Right, it's definitely in the downtrend even on H4 time frame, and we do have some minor structure over here. Okay, so structure for us is simply just, you know, again to recap, is just support and resistance. We just term it slightly differently, and what we want all of you guys to start learning is learn how to read, you know, movement in prices. All right, so once you identify, you know, you can read movement in prices like this, it's very easy for you to start identifying potential setups in the market. So we have this 4 points or this 3 swing, right? It has already a potential setup that is going on, right? Basically, first you identify the market is already trending in such an environment, right? You identify that the previous support level is here, is breached. Right now, support is turned into resistance. And then the third step is we just pull in our Fibonacci tool to see if there's any confluence. You can see if I just remove those that's unnecessary. You can see that 61.8 Fibonacci level actually confluence very nicely with your previous structure over here. Okay, so what we are waiting for is, we don't take a short trade right now, but what we are waiting for is for price to actually retrace back towards this area at 1.097. All right, for a potential short, all right, in expectation that price will continue in this trend. And of course, you also need to look, those who are actually coupling fundamental and sentiment, you need to consider those 2 things as well. Okay, because the fundamental, just now JT has covered as well. You look at today's Euro fundamental PMI, it's really, really strong. All right, it's one of the highest PMIs that is being released above all, you know, 50 plus. And the only thing that is still putting the euro dollar down is really the current sentiment. That's it, right? But fundamental of the euro is surely showing sign that it's improving. Okay, so if you're doing this kind of trade, that means you are shorting euro and buying dollar, just be cautious. You know, when price touches and retrace back towards 1.097, you want to do a quick check whether the sentiment on euro is still towards the bearish side, okay? Because fundamental is showing some improvement, so you need to take note of that. So that's how you couple, you know, the various approaches towards trading. Okay, and if I go down to 1 hour time frame, all right, on euro dollar again, to see if we have any potential setup, even on 1 hour time frame, you know, you can see this level is pretty obvious. All right, the 1.097 is pretty obvious. It's a very clear support turn resistance play. Right, and of course, what we have over here is price is showing sign that it's turning up right now because of today's positive PMI. All right, so we just need to wait. All right, that's about 100 pips away from where price currently is. There's a high chance that this can happen. This setup, all right, can happen in this week itself. All right, so that's the top process that we have. So other than that, you know, we just wait for market to reach where we want to look out for trades, and we don't rush into it. Okay, so if there's no trade, we just wait patiently. That's it. Okay, so I also want to bring you to dollar yen. Okay, it's very interesting because dollar yen, we have a lot of setup that's ongoing. So I just want to share with you how we deal with such situation when we have more than one setup going into, you know, one particular currency itself. Right, so let me clear everything, bring you, you know, back to the process of looking at daily what's happening. Okay, so if you look at dollar yen, all right, there was a fall before this, and what's happening right now is price is actually in a very tight consolidation as well. All right, it's forming a consolidation pattern. All right, it tested the bottom over here 1 time, 2 time, 3 time. At the top, we have a downward trend as well. Okay, so this kind of formation, usually we can see that price will be a trend continuation pattern. Basically, price will break below, right? But it's not all the time. So what we do is we always wait for confirmation, and we don't trade this kind of breakout pattern. Okay, but what I want to show you is we also don't trade on daily. So just this kind of quick analysis on the daily time frame is just giving us a broader bird's eye view, right, or a general picture of what's happening in the market. Okay, so let's drop down to H4 to take a look at what's happening. Okay, so you can see H4 over here, or previously it's an uptrend, and then right now on this perspective on H4, basically it's also in a consolidation phase. Okay, so once price is in the consolidation phase, we then again adopt that kind of strategy to tackle this kind of environment. Okay, so those who actually attended the TA class would know when its price is ranging, price is in consolidation, we basically just use the advanced price pattern strategy to tackle the environment. Okay, so what you need to do then, the first thing is always train your eyes to look for swings. Basically, swings means market movement actually move, so you can actually identify that we do have, you know, some kind of movement, that's price moving up and down like this. All right, and of course, for those who have the indicators, you can actually use those indicators to help you identify these swings easier. Okay, but because of experience that we have, I have in trading technical analysis for some time already, I can quickly see that, you know, this is actually one potential setup that we have over here. If I just pull in my FIB from this recent swing low to the recent swing high, okay, and I pull in the relevant levels of Fibonacci, you can see that we do have a potential pattern, because from this starting point, from X to A, and then it comes down to B point, you can see a retracement of 78.6 Fibonacci. Okay, so that's where we have a potential M-shaped formation, and this pattern is the butterfly pattern. Right, so if I pull in my triangle tool, you can see this is how it looks like. It completes at the 127, right, at the 102.3, 102.30 level. Okay, if I drop in a horizontal line and I just bring you to the daily time frame to look at the perspective of where this pattern completes. Right, it's not it doesn't complete at a very significant support level, because what is happening over here, this white dotted line you can see, it's a minor support structure level, because it tested sometimes, right, but price has been breaking up and down above it. Right, so it's a minor one, but it's not a very significant one. But having said that, doesn't mean you cannot take this trade, right? You can still take this kind of trade, just that you might want to be more cautious in managing this particular trade. You need more active management to decide, you know, whether you want to quickly shift your stop loss to break even and etc. Okay, so this one we talk a lot about it in class, how you manage certain trades. There's no one right rule to follow, right? But what you need to do is always go according to what is your personality and what is your trading style. Okay, so this is on H4. We do have a potential one over here. And if I just show you, right, another setup that we have. Okay, if you just flip, right, basically you start to look at swings in slightly different perspective. Right now, if I just do it like this, okay, so from here, this swing high to this swing low, you start from here, you have X, A, B, C, right? We do have a potential sell pattern as well. All right, so if I pull in my FIB from here to here, okay, you can see this retracement comes in, this B point retracement comes in at 61.8. So that gives us another potential pattern, right, which is different from just now what we identified. Just now we identified a butterfly. So if it comes in at 61.8 Fibonacci retracement, is actually a Gartley pattern. Okay, so how we do it is, how I trade it is, I take an extension from B point to A point, all right, and I look out for that 127. Okay, and that's where the completion would be. Okay, so I've delayed the rest of my FIB. Okay, so how the pattern looks like is this, right? So from X to A to B, it comes down, C, and it completes at D. Okay, so D point completes at 104.45. So it's a potential sell pattern. All right, just now we identified a potential buy. Okay, so if you spot this kind of setup, right, so let me just drop. Just now it's at 102.3. This one is at 104.45. If I go over to the daily to give you another whole bigger picture of perspective of this, Right, so basically you identified two key levels that you are interested to take a trade. Right, one is at above here at 104.45, one is below at 102.3. Okay, how you deal with this kind of situation is that traders who are just purely on technical can actually look out for these two levels. All right, but if you are coupling with fundamental and sentiment, okay, what you need to do is then use the fundamental as a guide to give you an overall direction, right? So just now we mentioned about dollar is currently the only central bank, all right? The Fed is the only central bank right now that is, potentially talking about interest rate hike, okay? And that gives a very clear divergence in the currency market itself, so, right? Simply means if dollar or the Fed is the only central bank that's talking about interest rate hike, it's generally more bullish from the fundamentals perspective. Okay, so what it means is that you might not want to look into selling the dollar yen, but instead of looking for opportunities to buy the dollar yen. Okay, but if you're a pure tech person, okay, what you can do is you can wait for confirmation when price touches this level to see if you want to take that particular trade. All right, so confirmation can simply means if you look at RSI, do you get an overbought or oversold condition, right? And when price reaches this key area that you're identifying, do you see any kind of price action, that confirm that price is turning before you enter that particular trade? Okay, so these are some techniques that you can do. Again, we always emphasize that there's no one right way, but the best method is actually something that suits your personality and your style itself. Okay, so this is on H4. So I want to show you, right, if you zoom down to H1 on dollar yen, you have even more potential setups that you can actually take. Right, so again, if I clear all this too, what I want to show you is on H4 again, H1, sorry, you can see that price is also in a consolidation ranging environment. So again, during this kind of setup, you do find a lot of pattern formation. Okay, so the one on smaller time frame, what I want to show you is we do have these swings as well, right? So you need to train your eye to start seeing price swings and get very comfortable with it, because this is the building block and foundation of the three strategies that we use over here. Okay, so if you can see this, right, the next step is very simple, because you just need to pull in your Fibonacci from this recent swing low to the recent swing high, right? You plug in all the relevant levels to check, right? For retracement, you can see this B point retracement comes in at 61.8, right? So that gives us a potential godly pattern. And how I trade it is I pull from B point, right, all the way to A point, and I wait for that 127 extension exactly as where I drew this. Okay, so again, this is on H1 time frame, so it's more of an intraday. All right, so basically intraday means at the end of the day, end of the trading session today, if price doesn't hit this, I will reassess the whole environment tomorrow, right, after the Asian session again, right? So every day we will repeat this process again and again to get ourselves updated on the most current context of the market. All right, so again, if I pull it up, just now we identified this level on H1. If you go over to H4, you can see this level is pretty significant, right? There was a huge reaction back then over here. Price has came up and test 1, 2, 3. So if it comes back down, it will be the fourth time testing this level at 103.35. Okay, so it's pretty significant support level should price comes back down. Okay, so what we are waiting for is, price is currently trading at about close to 104. Okay, so as long as that's about 70 pips, again, it's highly likely that this pattern can complete within the week itself. All right, so just want to share with you this kind of setup. And of course, if you are those who are very aggressive in intraday trading, using this kind of similar strategies, all right, showing you from H4 to H1, and now if I decide to drop to hit M15, all right, even in 15 minutes time frame, I can show you that similar techniques can be applied across board, right? Again, always train your eyes to start to see swings in the market. If we start to see swings like this, from the recent high to the recent low, and then retracement back up, right? And then price drop towards this, and then it starts to go higher. Okay, again, what you see over here is a potential W formation. It's not the most ideal one, all right? But again, what we like to emphasize is we always trade on Fibonacci. Okay, so the visual, whether it's nice looking or not, to me is not that important. right? But it's more crucial is that the Fibonacci ratios are met. Right, so you can see over here from X to A, this B point comes in at 61.8. So it's again another potential godly. Right, so how I trade it is that using 127 extension, right, pulling from this B point to my A point, right, and I'm aiming for this 127 completion over here. Okay, so this pattern looks like this. All right, again, just like to emphasize, it's not the most ideal looking one, not the most nice looking one, but in terms of ratio, it's still a valid one setting up. Okay, so if you are looking to trade, you know, very small time frame, M15 on day trading, basically this kind of trades, you know, at most it probably can just last you maybe 1 to 2 hours, and then you get the outcome of the trade itself, whether you are profitable or it's gonna be a losing trade. All right, so this level is at 104.13. So I just bring you to 1 hour to show you on a higher time frame the context of this trade. All right, again, pretty significant in terms of this level. You can see some form of reaction over here, pretty nice. All right, and in the past over here as well. Okay, so I just want to show you, you know, the process is the same. Whatever time frame I go into, I can show you the process over and over again. Okay, so even on 5 minutes, all right, if you want to do that, all right, just for practice purposes, you can really do that, all right, even if on 5 minutes. Okay, but your analysis needs to be quick because on 5 minutes time frame, price is actually taking every time you decide to do some form of analysis. So if I just show you, you know, if you start to see price in swings, right, you can really start to see a lot of potential setup in the market, right? But again, what I want to emphasize is have the discipline to follow your plan. So if your plan is not to trade on 5 minutes, then don't be an itchy finger and then start to click on lower time frame and then start to trading in and out the market itself. Because if you don't do it consistently, you actually lose a lot of money from this whole process. All right, so what I want to show you is from this recent swing low, X to A, A to B, B never touched 786. So again, it's another potential godly pattern. And we are looking for 127 extension from our B to A point. All right, so from B point to A point, looking at that 127 extension, completion at 103.85. I just drop in a horizontal level at this. All right, bringing you up to the 15-minute to look at the larger context, what's happening at that level. You can see that, all right, it's not a very significant one, but we do see some form of reaction, right, in the past as well. Okay, so just showing you that, you know, this kind of process is similar across board, no matter what kind of time frame you are using. All right, hopefully you start to, you know, appreciate the part where you need to start to train your eyes to look for swing, because this is really the building blocks of all the 3 strategies that we are using. All right, so let me pause and take a look if there's any question from the floor. Anything that you guys want to clarify, feel free to put it into the chat box itself. All good? Shorted time frame. Okay, we have a question here. All right, asking if shorter time frame more bullish. Okay, just like to tackle that question. All right, doesn't mean that. Okay, what I show you over here is the shorter time frame is showing us bullish setup. All right, but doesn't mean that okay, the concept or the understanding isn't that shorter time frame means it's more bullish, but what it means is that on the shorter time frame, all right, based on the strategies that we use, we are only able to identify some form of bullish setup. Okay, doesn't mean that if we go higher time frame we are bearish, and then we go shorter time frame we are bullish. But what I want to show you is we always follow as to what the chart is presenting to us, and then we respond to it, right? So we don't put our own perception into market and say that I believe that, you know, it should go up, and then I only squeeze an idea out of it. Okay, so I'll keep this dollar yen on 5 minute time frame over here, and we'll see, you know, at the end of this sharing session, this webinar itself, if price comes down to touch this 103, all right, we might have some some case studies to share with you guys. Okay, but I just want to point out that I personally don't trade the 5-minute time frame. All right, the lowest that I go is actually H1, and I'm just using my 15 minutes time frame for confirmation entry. Okay, so I hope that answer that question over there. Right, let me go back to gold. Just now at the start, I mentioned that we do have a level that we are looking out for gold. Right, gold is on H1 time frame. Right, so this level is which we are looking at. All right, 1273.25. All right, so price stalled after since we analyzed at the start. All right, price has stalled right now at that level, not moving. Okay, so next one, let me just bring you to let me just talk about okay, let's talk about this setup, right? Kiwi franc, so I can show you the different setup that we have. Okay. Right, so let's look at Kiwi Swiss franc. Just a quick disclaimer that we don't usually trade the Swiss franc. All right, we just don't like that particular currency pair. But as coaches, what we do is we do look at all the potential major currency pairing. Basically, we look at almost 28 currency pairs, includes your commodities and index, just to share with you, more potential setups that we have in the market, right? Because some traders, they don't mind trading the Swiss franc and such, but personally, I don't really like trading that Swiss franc. All right, so just show you perspective, and again, just to walk you through the process of how we do analysis. Right now, what we see on daily time frame, price recently rallied, okay, and then right now is actually in a range environment over here. Okay, with the highs tested 2 times, with the low tested 1 time, 2 time, 3 time over here. Okay, so price currently on the daily time frame is in the range. If you go down to H4, right, what we see is it's still in a range, all right, but it's inching lower. Okay, so if you start, for those traders who trade using channel, you can definitely see that is a bearish channel, all right, though the angle is not very strong, but it's still no doubt a bearish channel. Okay, but we don't trade this kind of channel. Okay, so back to what we usually do. All right, so we look at this. Okay, it's going down. All right, on the H4 is coming down, and what we identified over here is that we do have some form of divergence. Okay, so if I draw it in to show you, this price prints a lower low. All right, and in terms of RSI, it prints a higher high. Oops. All right, so you can see from this chart, price prints a lower low, RSI prints a higher high. Okay, so that's a divergence. And once we identify that, divergence simply means it's actually a trend reversal kind of setup. All right, so it's showing that potentially the price might turn. Okay, but we don't trade this kind of divergence straight away because, as I shared earlier, if you attempt to take all the divergence trade like this, you actually lose more money than make profit. Okay, so what we need to do is you need to wait for some form of confirmation from price. All right, you need to get more confirmation from price. So what we need is, this is the previous structure, right, that is in between these two bottom. All right, so what we need is for price to break above this to show that yes, price has changed its direction. All right, so once price does that, okay, we just pull in our Fibonacci tool from this recent swing low to the recent swing high, and we use the golden ratio a lot, which is 61.8 Fibonacci level. And we are waiting for price to enter this area, right? So most of the time, you realize that if you use this kind of strategy, that this 61.8 level, all right, Fibonacci level will come in confluence with your previous structure level over here, all right? So when you have two things coming together, that's what we meant by confluence. Okay, so what we are waiting for and what we are expecting will be for price to do this, all right? For it to come down towards this area. Right, and then we expect that there will be some form of bullish reaction over here, and that's where we look for buying opportunity to expect price to continue higher. Okay, so this is again pure tech analysis, meaning if you want, you need to look into also what is the fundamental sentiment on Kiwi as well as Swiss franc. Okay, so just to quick recap is that fundamental on Kiwi is pretty positive. If you look into the COT report and the sentiment on Kiwi is also positive. All right, so what we have right now is we actually bias towards more towards buying the Kiwi than selling it. Okay, so this is one potential setup that we are also eyeing on H4, right? So H4 is basically a swing trade. Okay, so let me just, as process, we go to H1 and see with any potential setups. Right, just a quick one. All right, see if you guys can identify anything, because yes, we do have one happening over here as well. See if you are quick enough to identify that. Right, so I'll just slow my analysis down to give you some time to take a look at the chart and see if you can come up with the same analysis that I have. Okay, so for those who took the technical analysis masterclass, definitely you'll be able to see this. Right, if you have practice over the weekend, most likely you identify this. We have new highs forming. All right, and over here in RSI we have lower highs. All right, so this is what we call a divergence. All right, and divergence indicate that price is potentially turning. Okay, and what we see over here is price did eventually start to turn. All right, but if you realize this is the previous neckline, which is the structure, price hasn't really breached below it. Okay, so what we are waiting for is we want to wait for price to go lower to show that yes, it has confirmed changing a trend. All right, previously it's an uptrend. It has indeed changed before we take a trade. Yeah, so this is very interesting, right? So let me give you an overall perspective as a trader, how you can start planning your trade in advance of the market. Okay, so what it means is that you always plan so that you can respond to it and you don't react emotionally. Okay, so on H1, what you see is that this level at 618, okay, just now we identified this, right, this triangle over here, we identified on H4 that we are interested to look for a buy setup. Okay, but price is currently over here. Okay, so on H1, can we short it before we look for a buy over here? Right, the answer is if you have a setup that gives you a valid short entry, yes, you can do that. Okay, and this is a potential setup that we can potentially look out for. Okay, so everything hasn't happened yet, all right, right now, because price is over here. But we as trader, we can start to anticipate if this happen, we can take advantage of it. Okay, so what we are planning right now is that if price move lower, all right, and it break convincingly this bottom structure over here, all right, it signals that the previous uptrend has indeed reversed, right? And what we want to do is wait for price to show that okay, it's starting to retrace right now. We can quickly pull in our Fibonacci tool from the recent swing high over here to where it's showing sign that it's retracing, right? And we can aim for the 61.8 Fibonacci level. Okay, so we can aim and expect that price will retrace up over here, and that's where we can take a short. Okay, let me write in the text. We can look for a short opportunity up there. Right? Let me change the color. Okay, so we can look for an opportunity to short the market if this happens. All right, and where can our target go? Our target can go all the way towards the bottom of this level at the 61.8 of 0.7035, which we identified is the area in which we are looking to buy on a higher time frame, which is H4. All right, so we can look for a short opportunity up here. All right, then if price goes according to our favor, we can take profit over here, and then we switch our position from a short to a buy. All right, so if I go out to a H4 time frame to show you an overview of what's happening, right, you can see that we as trader, right, we has the capability and the ability to actually analyze before the market happen what we can take opportunity of it. Okay, and if those who are even more advanced, okay, if this happen, right, you might even have a potential pattern forming, right? You can have your X to A to B here, right, B to C, C to D, right, advanced pattern completion. So you can even have TP1 here, right, for your short position, TP1, and then you can have TP2 at the completion of an advanced price pattern. Okay, so all these things, it takes some practice. All right. So as of now, for those who are still pretty new, don't be discouraged that you're stuck, you get lost, you're not sure what's happening in the market, because to able to do this, you need to put in quite a bit of practice in the market. You need to, of course, put in some time and effort to really start looking at chart. Right, and of course practice on charting so that you eventually will equip yourself with all the skill sets. All right. So I'll pause here to see if there's any questions coming from the floor. Right, so those who are on Facebook live following us and watching this, if you have any questions or any pairs that you want us to analyze, feel free to let us know as well. Right, so let me go back to dollar yen. All right, just now we are looking at M5. All right, so let's take a look at how price has moved. Right, so you can see price actually changed after that, as in not changed, but price move after that. All right, so right now you need to adjust a little bit. So right now this is how it looks like. Right, so again, if you're trading on smaller time frame like this, you need more time and commitment to monitor the market, right? Because every time it's actually evolving, it's always moving. Your analysis needs to get updated accordingly as well. Right, so just to share with those who are pretty new and would like to understand more as to how we couple current sentiment and how we check current sentiment with technical analysis, I personally use a lot on Forex Live, right? Because it's one of the better free news feed that I can get as a retail trader. Right, basically it's very powerful in the sense that it actually provides you with updated, close to almost instantaneous update of the currency market, what's happening in the financial market and such. Right, so if you look into the Forex Factory calendar, right, you can see that we do have some central banks speeches from the US over here. All right, 9 p.m. right, which is already taken place, right, from Dali as well as Bullet. You can see that Forex Factory do report those as well over here, right? So you talk about low interest rate likely to remain the norm for 2 to 3 years, right? So you can click more and then have a quick understanding of what was the content of this speech. No comments on timing of the next hike. See rate path flatter than the rest of FOMC, right? So basically, Bullet is slightly dovish, all right, from what he's saying over here. So that might give some bearish sentiment on the dollar. But again, you need to take note that these central bankers are not. It might not be super key simply because they are already perhaps a dove or a hawk. All right. So basically, if let's say Bullet is a dove, all right. So if he said something dovish, it's very normal. Price market would not react to it. Okay, but of course, if he's a dove and then he started to say that, oh, the Fed must increase interest rate in December and such, so he changed his stance, and then market will actually react very volatile to that. Right, so this kind of knowledge and experience comes with trading the market after some time. Okay, so don't be too rushed into wanting to understand all this in overnight and one go. All right, so just check again. So far all good. Right, no questions. Let's look at okay, any pairs that you guys want me to share my analysis with you guys. Right, if not, this one you guys should all receive it. So you would have practice over it. The reason why we don't put in the exact stop loss, take profit, etc. is we really want you guys to go and practice doing it. All right, so this is more like we give you a hint that there's a setup over here in this particular pair, and then just look onto your chart and practice to do the analysis and see if you can actually identify these setups yourself. Okay, so that's actually very important, because if we spoon feed you every day, you won't learn as a trader, right? So that's the purpose why we don't give you all the information, but provide you with sufficient so that you can work on it. Right, so I think JT went through this just now. Okay, so nothing much that I need to walk you through on this report. Yeah, so Okay, we have one person asking for oil. Okay, so let's take a look at the oil market. Okay, if you're trading oil, you need to take note of what's happened as well. All right. So again, how you do that is you go over to Forex Live. Okay, you need to check, because if you're trading oil, you need to follow the news and updates from OPEC pretty closely, because that will definitely move the oil market. All right. So how you do it is you go to forexlive.com, click onto this thing called Session Rep. Okay. Again, for some of you who already know this is actually recap. Okay, look at section recap. It's very useful because this is more like a summary of what's happened. Okay, so if you look at Asia, and if it's the first week, it's the first day of the week itself. Usually this Asia, the Monday Asia rep, will also report on what happened on the weekend, right, which is Sunday. So if you look at this, right, there are some news that's regarding Iraq and OPEC. Okay, and so Iraq actually supports OPEC cuts, but not for Iraq themselves, right? So what it means is that Iraq is not really agreeable in actually doing the output cut on oil. So what it means for oil is that supply will continue to be there, and that will cause, based on supply and demand, that will cause prices of oil to actually dip, right? Because supply continue to increase, that will cause prices to drop. Okay, so and if you look into oil market, okay, let's go over to at least the H1 time frame. All right, so on H1 time frame, you can see that today when market opens, because of that, you can see that the momentum for oil is actually towards the downside. Okay, and that's because the sentiment from Sunday and today itself during the Asia session, all right, that's where the bearish momentum comes from. Okay, so if you're trading oil, especially oil, you need to follow the OPEC news itself. Okay, but if you look at technical analysis alone, all right, the process is always the same. Go over to the daily time frame, look at what's happening. Okay, so if you look at the daily time frame, all right, other than the huge drop last time, okay, right now we have a rally over here, and price currently is actually in the consolidation phase. Okay, but if you draw in, it's slightly towards the upside because we do see some new lower highs forming, but this break of this previous high is actually not a very convincing one. Okay, you can see on the daily time frame, this break of the previous high is not a convincing one. So what I would do and what I would classify this is still in a consolidation phase. Right, so if it's a consolidation phase, based on the strategies that we have, I'll always adopt the advanced price pattern strategy. Okay, so if I drop to a H4 time frame, I will start to see if is there any pattern that I can identify. Okay, so if I even zoom in smaller over here, right, what you can see is this area is actually in a consolidation phase. Okay, and we do have some form of small minor fake break over here. Okay, let me zoom in a little bit to make this clearer. Right, so what we are seeing over here is still in a consolidation phase. All right, so then what you need to do is start to train and see if you can start to train your eyes to see price swing. Right, so on the H4 time frame, you can see that we can identify this kind of price swings. All right, you can identify that there's a potential M formation. Right, so once you do that, what you need to do next is just pull in your Fibonacci tool. All right, from this recent swing low to the recent swing high. All right, let me insert all the key levels. Okay, you can see that this retracement down here, all right, comes down to 61.8, but not the 786. All right, so we do have a potential pattern forming, and this one is using the 127 extension. Okay, pulling the extension from B point to A point, and the completion is at 127. Right at this level. Okay, at the 49.72. So there'll be an area in which we will look for an opportunity to long the oil market. Okay, if I bring you back out to a daily time frame to look at the bigger perspective, and see what's happening in this particular level, you can see that the white dotted line, right, is the area in which we are looking to buy. And if you look at this, is in terms of technical analysis, right, it's not a bad area. It's pretty good because we do have some form of resistance in the past, all right, and now price has broke above it, is turned to a support level. Right, so if price comes down towards this level at 49.72, all right, you can potentially look for a potential buy setup over there. And if you start to include in more basic kind of TA analysis, all right, you do have an upwards trend line as well supporting this area, right? So that's one confluence going there as well. Okay, if I go down to 1 hour time frame, let me just do some analysis as well. We might get a one-to-one movement. Not really. Okay. Yes. So even on H1 time frame, right? This setup is pretty clear. Is the key level to watch is 49.72, and if you look left over here, we do have some form of very nice support level coming in confluence with that Fibonacci extension. Right. So this is oil market. If you are looking to trade it, all right, this is the level to look out for. Basically 4972. Right, we do have some questions coming in over here. All right, asking, can I say that price rejection equals pin bar? Okay, so just to check and clarify, all right, when I mean price rejection, okay, there are many forms of price action that you can actually trade. Okay, but for me, what I define by rejection is two parts. One is pin bar formation. All right, so basically pin bar is very clear. Let me find one on the chart and show it to you what it means. All right, so let me just zoom in. Okay, it's not the ideal one, all right, but it looks something like this. Over here, this is a pin bar, right? So basically a pin bar is the wick, the tail, it's actually way longer than the body. Okay, so if you look at this green one over here, which my cursor is, right, this is not a pin bar. This is basically an it's called a doji. Basically, it's uncertain where it wants to go. Okay, so to me, rejection, one of the candle is this. It's called a pin bar. Okay, the other form of rejection, it's actually, let me just bring you, see if I can find any over here. Okay, the other kind of rejection that I would like to trade is actually something called an engulfing. All right, so if I'm looking to buy, okay, I would want to have an engulfing pattern like this. All right, so basically what it means is that the previous candle is a down candle, is a down bar, and the next candle show a stronger bullish momentum. Okay, basically what it means is that it has to close above the previous candle, all right, and that's what we call engulfing. All right, so I'm actually trading these two kind of candle pattern. Right, there are many other forms of rejection pattern in candlesticks, but what I do is I only trade these two. All right, and what I feel is more than enough. Basically, I don't need a lot of signals or trigger entry to enter a trade, so this two is more than enough for me. Okay, but having said that, you need to go and figure out which kind of candlestick rejection or candle pattern rejection that you are comfortable trading with. Okay, so for me, two kinds. One is a pin bar, one is an engulfing bar. Right, we have another question coming in asking XPX 500 is in an extreme zone, look out for divergence. All right, so let me go over to XPX to show it to you on the chart. What does it mean? All right. So, sorry, let me just zoom out and clear the chart. You have a divergence, extreme zone, if I recall correctly, pattern was spotted, good to short around 2159. Right, so let me just do a quick analysis. All right, okay. Okay, so very good. You identified one level at 2159. All right, yes, we do have a potential pattern forming over there. Right, but before I jump into that, I would like to again walk you through the entire process when we do technical analysis. All right, the first thing is we always go to daily time frame to have a bigger perspective of what's happening. Basically, SPX is the US S&P 500. You can see that what is happening for the past close to 1 month, it's actually not moving much. It's in a range environment, and of course this can be explained because the market is waiting for US election, all right, before it does to move off in a clearer direction, right? Whether Trump is going to win or Hillary is going to win, that's definitely going to impact the stock market in the US. Okay, so right now, if you look at daily time frame, it's actually in the consolidation phase, all right. But if you look at the previous trend, it's still in an uptrend, all right. Right now, daily is in a consolidation. If you drop into a H4 time frame, all right, again, it's pretty much similar to what you see on daily. It's still in a consolidation. You can see this is the low of the range. That's the high of the range. Okay, so on H4, it's not very clear into what's happening because you can see each candle overlaps each other very closely. You can't really identify swings very clearly, right? So what you do is then you can drop down to H1, where you can see the movement of price way clearer, right? And the most recent one over here, if you focus on the right side of the chart, you can see this swing to this swing high to this swing low forms one swing, all right, and then it retraces up here, all right, and then it moved down, and then now it starts to go higher. Oops. Right, and then now it starts to go higher. So once you identify this kind of formation, right, whether is it a W formation or M formation, what you can do is you can start to pull in your Fibonacci tool, right, from your recent high, the first starting point, to your recent low. Okay, and if I pull in my relevant levels, okay, you can see that from this swing high to this swing low, this retracement comes in at 61.8. All right, so when the retracement comes in at 61.8, it's actually a pattern that it's called Gali pattern. All right, so we do trade that using a 127 extension. All right, from B point we pull it to A point. Okay, and we trade that 127 extension. Okay, we have a question. Darren, this is actually on H1 time frame on S&P. So it's a H1 time frame, it's not a H4. Okay, so from here, okay, you can see that the level that we're looking out for is the 127 extension. This coincides with 2159. Okay, so if I draw in the triangle for those, visual guide for those who needs it, okay, it looks something like this. Okay, so technical analysis wise, you do have a potential level to look out for a shorting opportunity over here. Okay, and if you do a basic technical analysis, you draw in a trend line, you can see this coincides very nicely on a downtrend. You have one test, two tests, three tests, and potentially another test over here. And if I just go on a higher time frame to see if we have anything else that we can find confluence, nothing much. The charts that you see on H1 and H4 is basically very similar. So if you're trading this S&P 500, right, you do have this technical setup. But if you ask us in terms of how we align the fundamental on S&P, this is more tricky because S&P is a combination of all the equities, 500 companies and equities in the US market. Okay, so the way to actually analyze it fundamentally is very complicated, it's very challenging, right? But how you can do it is look out for the top performers in S&P, look out for the earnings that is being released, right? How you can do that is you go over to investing.com. Let me look and see if I can remember how to explore investing.com. Right, you can actually look out for, I think. Okay, let me do a quick check. Okay, actually how I did it last time was I just Google earnings report. Watch this week, all right. And what you can find is, let me just do a quick check over here. Okay, let me just type in investing.com. Over here, all right. So if you just type, Google search earnings report to watch this week investing, right? Under Google search, you can find out, what are some of the earnings report that is going to be released this week. Okay, so I'll just bring you through this whole process. You click on this week. Okay, so you can see what are some of the key companies that have their earnings report for this particular week. All right, this is important because when these earnings are released, whether is it beating the expectation or it came out worse than the expectation, it's definitely going to affect the stock prices in the US equities, and that will directly translate into S&P performance as well. Okay, but of course, not all the companies are gonna be, you know, huge impact. But look out for the major ones, like, you know, maybe 3M is gonna be a huge one. Apple earnings is gonna be released tomorrow. Okay, it's key. It's definitely gonna be important. All right. Some companies like maybe those major and important ones. All right. So you can scan through. Right, so you can see this week, right, for Wednesday, you have like Coca-Cola, those kind of companies that are popular. We don't really, you know, research a lot into all the companies in the US itself, right? Because we don't really trade a lot of the index, all right? But we use index to basically analyze what is the risk environment in the market. Okay, I think JT shared earlier a little bit as well. So if generally if the equities market is rallying, is performing, basically is indicating that it's a risk-on environment, certain currencies will tend to rally as well. Okay, and of course, when it's a risk-off environment, certain currencies will tend to depreciate and other kinds of currency will tend to appreciate. Okay, so we look into the equities market to decipher how it's going to impact the currency market. We don't really actively trade it. Okay, but since we're on this topic, if you want to short the S&P, you definitely need some form of catalyst, some form of story, you know, in terms of what is going to drive the S&P market lower. Okay, so this can comes in terms of, you know, maybe Russia decide to really publicly declare a war with US. You know, this kind of news is definitely going to shock the market, and it's definitely going to be negative for the equities market. Okay, so this kind of news you need to monitor. So again, if you're trading the equities and you trade the currency, it's slightly different in terms of the things that you need to pay attention to. Okay, but you definitely cannot just stick, you know, your eyes on the chart and then just expect to understand everything that's happening in the financial market. You definitely need to look beyond the chart, understand what is the forces behind those movements. All right, so wait, we do have. Okay, we have one question. I draw with a short position that you seem. Okay, I don't. Sorry, we have a question here, but I do not really get your question. Maybe you want to. I'll give you some time. Elaborate a little bit on what you mean. Because I might not recall what you are referring to in the email. All right, so maybe you want to just elaborate a little bit on what you meant by that. Right. So let me check. Okay, so I hope it's clear in terms of S&P, the outlook of it. Okay, but if you look at just pure technical, we do have some very nice confluence over here. All right, any other questions that you guys have? OIH4. Okay, let me go back to OI. All right, so we have a question stating that OI on the H4 time frame, that is a pattern formation. Okay, H4. Let me just H4 copy. Okay. No. Okay. So basically, one of the participants asked if H4 OI, which is this current chart, identified a Gartley pattern. Okay, so based on the most recent movement over here, right, on this chart itself, there's actually no pattern other than this bullish setup that I identified earlier just now. There's actually there's no bearish pattern as of this chart. Okay, the closest that you can identify is actually this swing. Okay, but it's most likely invalidated already because of this huge dip since the market opened. Okay, the closest bearish pattern was actually this, but it didn't hit the completion level. Let me just do a quick check. Yeah, all right, so 127 is over here, but price didn't really hit that level and then it turned already. So other than this one, there's actually no bearish pattern. Okay, so what you can do is, sorry, I didn't really okay, there's no pattern other than this one. Okay, so what you can do is, maybe I might have missed that. Give me some time to reply that email. All right, or if what you can do is screenshot and drop me another email, all right, so I can reply to your email accordingly to that. Okay, so other than this, right, in OI, there shouldn't be any other patterns that you identified. Okay, so just to answer that, what you can do is screenshot, send me an email. I'll reply to your email on that. All right, we have another question coming in. Corner. Okay, since it's loading. Okay, we have this one. Oh, okay. So we have one participant also sending in terms of S&P H1, identified a divergence. Okay, so let me go over to H1 time frame. Okay. This is on S&P. Okay, just like to share with you because I'm using TradingView right now. My chart is slightly different, all right? But from your chart that you send me, okay, it's a valid divergence, all right? It's setting up, but it's not confirmed yet, right? So again, I would just like to share with you guys that if you just keep trading a divergence, you keep shorting when there's a divergence, it's definitely not going to help you in the long run, all right? So wait for a confirmation that the trend has indeed changed before you take the short trade. Okay, so don't short it just because you have a divergence. Okay, let me go back to oil, right? Because wow, you see this, right? So just now, right at the start of this session, we actually talk about this oil setup. All right, two levels that we're looking at. One is this 61.8, and the other one is slightly higher at 886. Right, so this level you can see. Right, so let me just remove that triangle. You can see that this huge bullish candle shot up, and just now I mentioned right at the start that because of the bullish momentum, I won't be taking this trade. Right, so since this happened, I would just like to share with you, if you put a pending order to sell, okay, just a quick recap on this trade, all right? So for benefit for those who miss out the front part, on H1 time frame, we have a previous uptrend, we have a divergence setting up here. Okay, price broke this neckline. It broke below it, and then right now we are waiting for a 61.8 retracement. Okay, and you can see just when we started this webinar, price actually pulled up here. Right, and for those who never put a pending order, you wouldn't have taken this trade. But those who put a pending order, you have taken this trade with a stop above the previous high. Okay, and right now you would already be in at least a 1-to-1 risk profit. Okay, so just this is something that I would like to just using this as a live example, live market, to share with you that there is an advantage and also disadvantage, alright, depending on your style, whether you want to use a pending order or you want to trade when the market gives you some form of confirmation. Okay, and this is a very good example because if you put the pending order, you are currently running in profit. Okay, and you can easily now shift your stop loss to break even and ride for a risk-free trade, right? But for us, for me, because I don't put a pending order, I want to wait for confirmation, I would have missed this entire move. Okay, so again, you need to understand, when you do certain things, there are advantages and disadvantages in trading. There's no, the best solution for everyone out there. There's no one size fit all thing. Okay, so this is something that since this happened, all right, just like to quickly share with you that and use this as an educational piece to share with you guys. All right, so even on 15-minute, you can see price stalled a little bit and then another huge dip over here. All right, so if you ask me, can I enter right now? I would say no, because if I enter right now over here, or even right now price is still dropping, if I enter here, okay, my stop loss has to go all the way back up over here, right? So my risk is definitely very, very high. All right, and the reward that I'm gonna get is not gonna be significant anymore. Okay, because if I decided to now short the market right now, my stop has to go above here. Okay, my target is at the previous low. You can see this kind of risk to reward 0.28. Please do not take this kind of trade, all right? Because if you take this kind of trade over a long period of time as a retail trader, high chance you're gonna lose more money than you're gonna make money. Okay, so again, understand all these approaches and thought process that we have, and when we share with you guys, it's really for you to go and develop something that suit your personality. All right, hope this is clear. Huh? All right, any other questions? Okay, let me go back to dollar yen. Just now we also talked about dollar yen. Oh, okay, you can see it break above it. I think there's some news that's happening right now that is pushing the prices of different currencies. let me just go down. Right, just now we identified something, right? So just want to share with you that this is something that is real. Reality in trading is that you can expect price to do this, right? But price can just give you another direction. Okay, so for those who like to just short here because you expect the pattern to complete, again, just like to show you that you cannot just do that like this, all right? Because you're actually gonna lose more money than you're gonna make. All right, so this one, let me just check. Dollar yen 104.45. All right, so we have a potential. I think that's clear on H4, right? So if you are looking at dollar yen, all right, just now at the start, we also identified one key level to look for a potential short trade. Okay, and that will be on 104.45 if I'm not wrong. Oh yeah, okay, JT just point to me that we do have a news release on US, all right, and that's a positive one. Right, that's your manufacturing PMI, right? So the PMI actual one came in at 53.2, and the previous one was 51.5. All right, so that's a huge improvement, right? And that's why you can see dollar strengthening right now. Okay, so if you are looking at selling the dollar yen, based on the current sentiment, please do not sell dollar yen. Okay, because current sentiment on dollar is strong, so best is just wait for more confirmation, right? But if you are really those that is really aggressive in going for counter trend, this is a potential level for dollar yen, 104.45. Okay, so if price managed to hit there, that's a potential level to look for a short. All right, all good. Any other questions that you guys have? Okay, if not, it's a good session that we have over here today. Pretty long one, all right? Because basically, normally our webinar runs about 1.5 hours, but as questions comes, as market give us more things to share with you guys, we usually just talk and share as much as we can. All good. All right, so if all good, I hope you guys at least learn something other than, don't just come in and want to look out for any potential setups that you can take. Those are the least important that you should get out from this kind of webinar sharing, but instead learn to use the things that we share with you. Focus on the top process that we have, because those are actually skill sets that are more important than, which price to actually short or buy. All right, so with that, we'll end the night here today. Again, for those who have more questions, feel free to email us. All right, and for our students, I'll reply your email. All right, but basically today was really busy editing some videos, so I'll reply your email by tonight. All right, so if you have more questions, feel free to just keep emailing us. All right, so other than that, I'll see you guys next time. All right, and we'll end this webinar over here.